Ondas Inc. has rapidly transformed from a small technology company into a much larger autonomous defense and drone platform. The investment story is now centered on autonomous systems, counter-drone technology, intelligence and surveillance platforms, AI-enabled battlefield software, and a growing portfolio of defense acquisitions. At around $9.74 per share on August 12, 2026, ONDS has a market capitalization of roughly $5.55 billion, while the stock remains extremely volatile, with a 52-week range of approximately $3.20 to $15.28. Ondas operates across autonomous systems, robotics, mission-critical technologies, private wireless networks, and defense/security applications. Its autonomous systems business is becoming the dominant part of the investment thesis, with technologies designed for intelligence, surveillance, reconnaissance, counter-UAS, infrastructure security, and autonomous operations. The company is attempting to create a broader system of systems platform, rather than relying on a single drone product. The biggest recent development is Ondas' acquisition of DZYNE Technologies. The transaction was valued at approximately $875.8 million, consisting of $200 million in cash and approximately 85 million Ondas shares, valued at about $675 million. DZYNE is expected to contribute approximately $191 million of revenue during 2026 and more than $300 million during 2027. While management expects DZYNE to be EBITDA positive beginning in 2026. Strategically, DZYNE adds long-endurance ISR, counter-UAS, and autonomous effects capabilities. This significantly expands Ondas' addressable market and gives the company exposure to several rapidly developing areas of defense spending. However, the transaction also increases the share count and therefore creates meaningful dilution for existing shareholders. Approximately 85 million new Ondas shares were issued to DZYNE shareholders. Ondas reported approximately $50.1 million of revenue in Q1 2026, representing a massive 1,065% year-over-year increase. Management subsequently increased its 2026 revenue target from at least $390 million to at least $525 million following the DZYNE acquisition and inclusion of Omnisys. The new $525 million target does not yet include contributions from Cyberhawk, which was expected to close during Q3. This means the company is moving from a small revenue growth story toward a potentially $500 million plus revenue business in a very short period. That is extremely attractive if management can execute. But investors should remember that a large portion of the growth is acquisition-driven rather than purely organic. Ondas also completed its acquisition of Omnisys for approximately $196.6 million in stock. Omnisys is an Israeli AI software company focused on battlefield decision-making and air defense operational architectures. The company is expected to contribute more than $100 million in revenue across 2026 and 2027. Because software can potentially generate higher margins than hardware, Omnisys could improve the overall quality of Ondas' revenue mix if the integration succeeds. This is important because ONDS needs more than just revenue growth. The long-term valuation will depend on whether that revenue can eventually translate into sustainable EBITDA and free cash flow. My base assumption is that Ondas reaches or slightly exceeds management's $525 million 2026 revenue target. The current Wall Street Q2 revenue expectation is roughly $68 million, which would represent an enormous year-over-year increase from Q2 2025. The August 13th earnings report is therefore extremely important because investors will want evidence that the company's backlog and acquisitions are converting into actual reported revenue. For 2026, I would frame the revenue scenarios at approximately $475 to $525 million for the bear case, $525 to $575 million for the base case, and $600 million or more for the bull case. Beating $525 million would strengthen the growth narrative, while a significant miss could trigger a sharp valuation reset. 2027 could be even more important than 2026 because investors will begin valuing Ondas based on its post-acquisition earning power. DZYNE alone is expected to generate more than $300 million in 2027. If the existing Ondas businesses, Omnisys, DZYNE, and Cyberhawk scale successfully, I see a reasonable base case revenue range around $850 million to $950 million for 2027. A stronger execution scenario could push revenue above $1 billion, while a slower integration scenario could leave revenue closer to $650 to $750 million. DZYNE management itself has projected more than $300 million of 2027 revenue. Traditional PE valuation is not the best tool for ONDS right now because the company is still in a rapid acquisition and expansion phase. Instead, I would focus on forward revenue, EBITDA potential, and eventual free cash flow. At roughly $9.74 per share, the company is already valued at approximately $5.55 billion, meaning investors are paying more than 10 times management's $525 million 2026 revenue target. That valuation is expensive compared with traditional industrial companies, but it could become reasonable if Ondas grows toward $1 billion plus of annual revenue and achieves strong EBITDA margins. The key question is therefore not whether ONDS is cheap today, but whether the company can grow fast enough to justify today's valuation. A conventional DCF produces a very wide range for ONDS because near-term cash flows are difficult to forecast. My framework assumes rapid revenue growth through 2027-2028, gradually improving EBITDA margins, increasing operating leverage, and eventually positive free cash flow. Under a conservative scenario, the intrinsic value is approximately $9 per share. Under a base scenario with successful acquisitions and strong revenue conversion, fair value moves toward roughly $16. Under an aggressive scenario, where revenue exceeds $1 billion and margins expand materially, intrinsic value could move toward $20, $25 or higher. The most important point is that these are scenario estimates rather than precise DCF outputs. ONDS is too early in its transformation for a DCF to provide the same confidence as it would for a mature company. My 2026 bear case target is approximately $6, $8, while my 2027 bear case range is approximately $6, $10. The bear scenario assumes slower acquisition integration, weaker than expected revenue conversion, continued operating losses, additional share issuance, and compression of the revenue multiple. The current valuation leaves relatively little room for disappointment, so if management misses revenue expectations or margins remain weak, the stock could decline quickly. Another major risk is dilution. The DZYNE acquisition alone involved approximately 85 million new shares, and additional equity compensation and future financing could increase the share count further. My base case assumes Ondas successfully integrates DZYNE, Omnisys, and Cyberhawk, reaches roughly $525 to $575 million of revenue in 2026, and approaches approximately $850 to $950 million in 2027. Under this scenario, I estimate a 2026 price target of approximately $12, $14, and a 2027 price target of approximately $15, $20. At a current price around $9.74, the midpoint of the 2026 base case range would represent meaningful upside, while the 2027 scenario provides a larger potential reward if revenue growth and profitability develop as expected. My bull case is much more aggressive. If Ondas converts its rapidly expanding defense pipeline into contracts and revenue, successfully integrates its acquisitions, and moves toward meaningful EBITDA profitability, revenue could exceed $1 billion during 2027. DZYNE's projected 2027 revenue alone is above $300 million. while the broader Ondas platform is targeting multiple autonomous defense markets. Under this scenario, I estimate a 2026 price target around $17, $22, and a 2027 target around $25, $32. This would require investors to continue assigning a premium growth multiple to ONDS. It is possible, but it is not my highest probability scenario. The biggest risks are valuation, dilution, acquisition integration, execution, profitability, and volatility. ONDS has grown extremely quickly, but rapid acquisition-led growth can create accounting complexity, integration challenges, and unexpected expenses. The company also needs to demonstrate that backlog converts into revenue, and that revenue eventually converts into cash flow. There is also a major expectations risk. The stock has already experienced a huge rally and recently traded well above $9, after being as low as $3.20 over the past year. If Q2 results disappoint investors, the reaction could be much larger than the underlying earnings miss, because ONDS trades primarily on future growth expectations. The next major catalyst is the Q2 2026 earnings report scheduled for August 13, 2026. Wall Street expectations are around $68 million of quarterly revenue. Investors should watch 5 numbers very carefully: reported revenue, gross margin, adjusted EBITDA, operating cash flow, and updated full-year guidance. Management's commentary on DZYNE integration, Cyberhawk, backlog conversion, and 2027 expectations could be even more important than the headline EPS number. If revenue comes in materially above expectations and management maintains or raises the $525 million plus outlook, the bull thesis becomes stronger. If revenue disappoints or management reduces guidance, the current valuation could become difficult to justify. My current scenario framework is: bear case, $6 to $8 in 2026 and $6 to $10 in 2027. Base case, $12 to $14 in 2026 and $15 to $20 in 2027. Bull case, $17 to $22 in 2026 and $25 to $32 in 2027. These targets assume substantial execution and therefore should not be interpreted as guaranteed outcomes. At approximately $9.74, ONDS sits between the bear and base case valuation zones. The stock therefore has attractive upside potential, but the risk is significantly higher than that of an established profitable defense company. My final rating for ONDS is speculative buy, high risk buy. The reason is simple. The growth opportunity is unusually large. DZYNE dramatically expands the company's defense capabilities. Omnisys adds AI software exposure, and management's 2026 revenue target has increased to at least $525 million. However, I would not classify ONDS as a conservative investment. The stock is already valued at roughly $5.5 billion. Dilution is a real concern. Profitability still needs to be proven, and a large portion of the future valuation depends on successful acquisitions and continued defense spending. For investors focused on risk-adjusted returns, the base case of $15, $20 by 2027 is more realistic than the extreme $25, $32 bull case. Overall, ONDS has one of the more interesting growth stories in the autonomous defense space, but the stock requires execution. If the company delivers on its revenue targets, expands margins, and turns its growing backlog into sustainable cash flow, the upside could be substantial. If execution fails, the downside could also be severe. Therefore, my conclusion is speculative view Y, with a 2027 base case target of approximately $15, $20, and a bull case target of $25, $32.